Today's lecture will be on budget and how to prepare a budget. Now the question is, why do we need a budget? Well, the budget, as you remember, is part of the very first stage of management accounting, which is planning. So once we set up the goal, once we identify the alternatives, which is going to bring us to the goal, once we assess those alternatives and choose the alternative that best is suitable to us to reach our goal, then we're going to prepare the budget. Now the question is what the budget is. Probably all of you making budget to some level in your life. But let's try to find a kind of overall definition for the budget and see what exactly budget is. Well, budget is detailed quantitative plan for what you get and how you're using it. Either financial, either any other resource. So you can prepare the budget for your cash flow, you can prepare the budget for your inventory, you can prepare your budget for your grocery that you're putting in your fridge. You can prepare so many budgets. But again, it's a quantitative plan of what you're getting and how you're using it. The very crucial point is you to understand that you cannot use something if you don't have it. So first, your plan always have to start, how can I get something that I want to use? How can I get time to prepare myself for the exam? Or how can I get groceries so I can cook myself for dinner? The act of preparing the budget is called budgeting, and the budget is used obviously for control. Why do we need it for control? Because we always want to compare where we are to where we're supposed to be. And that's called budgetary control. Two stages in the budget. One is the planning, which is about developing objectives. So first we're going to develop our objective. Then we're going to prepare various budgets to achieve those objectives. With the budget, you don't have to achieve only one objective. You can have multiple objectives. And then you're going to prepare multiple budgets. That's going to help you to achieve, again, those objectives. Control is always involved in the process. So don't get scared when somebody says control, control, control. But control evolves steps to which are taken by you, because you're with the manager, just for one reason. We need to do that control for only one reason, to make sure that we can achieve our objectives. So basically, our control is in your favor. Once you have your goal, you want to reach your goal, correct? So if you want to reach your goal, you have to do some checkups or control, implement some control in order you to make sure that you're actually on the right track to achieve your goal or make sure to get your objectives. Which advantages when we have a budget? When we have a budget, we can actually define the goal and objectives. Now, clearly we see if we do this, what we're gonna achieve. Budget also help you to coordinate activities. What will be those activities? The activities, again, are related to the goal and objectives. What you have to do, how you have to do it in order to achieve what you want. It's going to help you to understand how you're going to allocate the resources in order to achieve your goal and your objectives. Also, it's going to help you to communicate the plan with the other users in the organization or the other members of the organization or other team members or other members in the household if you're preparing budget for the household. That's why usually one person preparing the budget for the grocery and the other give it to another person, go and say, go and fill the list. Make sure you check everything on the list. Once you prepare the budget, it's going to give you opportunity to think about the future and how you're going to plan your future. What kind of steps you have to take on the different level. It can be, for that reason, it can be, the budget can be different periods, but on every single period, you can see what you can do, how you can do it, and keep going, keep going. And the budget is going to help you to uncover those bottlenecks that you may have. The bottleneck, obviously, you should be familiar with the, and you understand what the bottleneck is. The bottleneck is technically constraint that holds you either to increase your capacity, either to increase your production, either to increase your knowledge, whatever that holds you, that will be your bottleneck. One thing that you have to understand, we have to use the budget responsibly, means that we're going to keep responsible or held responsible people only for the items that they actually can manage and control. We're not going to keep them responsible for the items that cannot actually have control over. What will be the timeline of the budget? There are two types of budgets. One is the operating budget, the other one is the capital budget. You already know from the financial reporting what's the capital asset and what's the operating asset. In other words, operating asset is your current asset. Capital asset is your long-term asset. Applying that knowledge and applying that terminology to the budget, obviously, anything within 12 months or current operating cycle of the company, it will be called operating budget because it's related to the operation. Operation, always remember, that's a 1 year on the horizon. Everything over 1 year, that become a capital. Why capital? Because obviously you're going to use that, whatever you're purchasing, is it the asset, is it whatever it is, you're going to use it for the long period of time. Once you use it for the long period of time, which is usually over 1 year, on that reason, you're going to start seeing the time value of the money. And then some different rules going to start applying on that for that particular budget and for those particular assets. So how we can do the budget? We can do it continuous budget. So based on the time, let's go focus first on the time. We can do it daily budget. We can do it weekly budget, monthly budget, quarterly budget. We can run a continuous 12 months budget. How we can do that? Well, very simple. We're always going to have 12 months budget. Means that we're going to split the Excel spreadsheet or whatever you're using for the budget. We're going to split it by month: January, February, March, April, May, June, July, August, September, October, November, December. And you're always going to keep 12 months. Means that when the January pass, you're going to add the January at the end of the budget. So again, you're going to have 12 months, starting now from February, ending from January. When every February is over, you're going to start from March and you're going to add February at the end. And that's how you're going to have this continuous rolling budget of 12 months. How are we going to prepare the budget? Well, one way to prepare the budget is this participative way. For that reason, that budget is called participative budget. What means participative budget? We're going to have all the team members in the company or in the organization to be involved in the process of preparing the budget. We're going to ask the people who are actually using the resources how much they want. And that information gonna roll up until reach the top managers. What's the benefits of having this? And asking the people who are actually using the resources to come up with the number of the budget. Well, if we do that, all individual or all employee or all people on the in the all level of organization, they're gonna view themselves as a member of the team. Since they know how to they using the resources and how much resources they need, that budget will be more accurate in estimates. Once we give the power of the people to make decisions and to participate in the work of the preparation of the budget, that's going to motivate them. So you have to understand the motivation of the people that you're managing is not always going to come from the high paycheck that you might give them. And the last thing is the managers who don't meet the budget cannot claim that it was unrealistic. Why? Because they're the one who actually prepared the budget, come up with the numbers. Is it good to have a participative budget? Obviously, it is, because encouraging different things in the your employee and the people that you're managing. But do we have to be careful? Yes, we do. Why? Because people are motivated by their self-interest. I believe we already come up with the idea that the thing that drives us and every single individual in this world is the greed. So don't forget that, and always keep it in mind. And also keep in mind that the goals of the individual are not the goals of organization. For that reason, you as a managers, you have to be able to identify if there's a budgetary slack in the budget, in the numbers of the budget. And if you see that, you to step up and change the numbers. What the budgetary slack means? Budgetary slack, simply explained, would be, imagine you're a salesperson. You're a sales manager. Your bonus is based on the increase of sales. If you achieve more sales during the year, at the end of the year, we're going to compare what you budgeted and what the actual result is. If you achieve increase in sales than the budget, I'm going to give you a bonus. So now at the same time, we're doing this participative budget. Okay. So what will be my motivation if I want to make sure that I'm getting my bonus? What kind of number of the sales I'm going to give you? What do you think? Again, I'm a sales manager. My bonus is related to increase of sales. You ask me to give you my budget for the year. What will be the numbers that I'm going to give you? If I give you high sales, and I'm never going to achieve those sales, and then never going to get the bonus. So go the opposite direction. My budget number will be way low than the sales that I know that I can easily achieve. So if I'm a car dealership and you ask me, hey, Ivan, how many cars you projecting to sell next year? I'm doing my calculation. I say, in a very low year, I can easily sell 50 cars per year. So my budget will be 45 cars. Why? Because when I sell 70, I want you to pay me the bonus for the 25 cars or 35 cars that I sell over the budget. Make sense? So on the opposite side now, the opposite side, if I am a production manager and my bonus is related to the cost savings, and you ask me for the number of my budget on the cost, yes, I'm gonna put now high number of cost. Why? Because I perfectly know on the very bad year how much is the highest cost that I can achieve. So if the cost is $100,000, I'm gonna tell you when you're asking for the budget, what will be the projected cost or the budgeted cost that you're anticipating for the next year. I'm easily gonna say 120. And when you ask me why, I can easily justify. I can justify it by the, well, we're hiring more inexperienced people which need more training, and we just bought a new machine that need to be implemented, and some additional tests are required. And also the current inflation right now is too high, so I expect the price of the materials to go up, and also the interest rate is high, so maybe the vendor is gonna try to implement that hike in the interest in their prices. Also, I see the gas price going up. Only for the last week, the gas price went up with 20-30 cents. That's gonna add up another to the cost. So I can easily justify my $120,000 in cost budget. And when I achieve $80,000 cost, I'm going to ask you to pay me the bonus for the difference. That's a budgetary slack. That's how you should identify the budgetary slack. But first, again, you have to understand what drives and what motivates your employees. For that reason, you have to have, if you want to be a good manager, so that's only if you want to be a good manager, you have to have those interpersonal skills that I told you in chapter 1. So you can actually understand people. I remember on the very, not the first job that I was working, the second job that I was working, the director of the company. So far, that's the only real manager, real director I ever faced in my life. But there was a catch. He was hired on age of 25 to be the director of big manufacturing company. So he was working, he has been a director for, when I was there, he was close to retirement age. So probably he worked, let's say 50, more than 35 years as a director. Imagine the experience that that person has after 35 years being director. That's his job. That's the only thing that he was doing since 25 when he was hired. He was doing just director. And I'm telling you, so far I haven't seen anyone like that, like him. Amazing, right? He knew everything about everyone. He knew how to approach the person. He knew how to motivate you. He knew how to push the buttons so you can be more productive. So that's another thing that you have to understand. You have to understand when the people creating the budgetary slack, and at the same time, you have to understand how to motivate and how to encourage the people to do the things that you want them to do. Now, the budget committee is the one who will be responsible for approving giving the guidance on the budget. That will be the budget committee. That will be standing committee, which is responsible for the overall policy matters. That committee will coordinate the preparation of the budget, resolve the dispute related to the budget when we have the budgetary slack or anything like that, and they're gonna approve the final budget. For the budgetary committee, the things that comes always in my mind is when on the government level they start fighting about the budget and the number of the budget, how we're gonna, what kind of policy we want to implement for the next year and the year to follow. So the successful budget, in order to be successful in preparation of the budget, and implementation of the budget, we have to have in mind three important factors. Probably there are more, but let's stop only on three. First one is the top manager must be enthusiastic and committed to the whole process. Top manager must not use the budget to pressure the employee or to blame them if something goes wrong. And the last but not least is the budget has to be achievable in order to promote encouragement and to promote growth. To give a chance to people to actually meet the budget and get their rewards. That's going to motivate them even more. So don't put the unrealistic budget that people, you already know the people, it's very hard to achieve it. That's going to create destruction in your company. Be realistic and encourage through the budget, encourage your workers to work in the best interest of you and the company. Now, the zero budget, another option for the budget is zero budget. The zero budget, there's too many people who are against it. Usually the budget is prepared based on the numbers of the previous years and adjusted to the changes in the forthcoming year. The zero budget starts always from zero, always from scratch. Well, even though it's a good thing to start from scratch, it takes a lot of time. So most managers argue that the zero budget is too time consuming and costly. At the end of the day, don't forget, you will always, as a managers, we always have to consider cost versus benefits. If the benefits is less than the cost, obviously, we're not making the right decision. So let's go with the budget. This is the chart. This is the overview of the master budget. What we can see on the top, and I want you to pay attention to that. Budget always and always and always starts with sales. I'm purposely emphasizing on that. And I'm purposely emphasizing on the definition of the budget of quantitative plan of how we're gonna get and then how we're gonna use the resources. That's why the starting point is always the sales. Don't even think to start something, entrepreneurship or company, if you haven't figured out from where the sales gonna come. Expenses are easy. We were joking when I was like a your age, we were joking, I'm not afraid of the high expenses. I'm afraid of low sales. For that reason, figure out your sales first, get your sales in order. After that, start spending the money. So let's start. First, we're gonna prepare the sales budget. Once we prepare the sales budget, we're gonna see how many units we need to sell. Once we figure out how many units we need to sell, then we're gonna prepare the inventory budget because we have to have that inventory available. Otherwise, we're not gonna achieve our sales. Once we have the inventory, once we figure out how much inventory we need, we have to produce that inventory. And since we're a manufacturing company, and you know that the product cost in the manufacturing company, in order to make a product is direct material, direct labor, and manufacturing overhead, those will be the three budgets that we're going to prepare after. Since we're splitting the cost on the way they appear on the financial statements on the product cost and period cost, the other budget that we have to prepare will be related to the period cost, which is selling and administrative expense budget. Once we have the product cost budget, direct material, direct labor, manufacturing overhead, and period cost, sales, administrative expenses, now we can prepare the cash budget. Once we finish with the cash budget, we're going to prepare first the income statement. And the last thing that we're going to do is to prepare the balance sheet budget. So let's start one after another and see how it goes. Now, there are two approaches now for this thing. One is me to go over the slides and to show you slides after slides. The other one is to use the Excel spreadsheet. Which one you want me to use? To go over the slides or using the Excel spreadsheet and make it more interactive?
Yeah, please go with Excel.
With Excel? Okay. Let's go with Excel then. I was thinking how to do this Excel, but let's start from scratch. That will be more interesting if we start from scratch. I have it already prepared, but let's start from scratch. Just give me a second to format a little bit my Excel spreadsheet so it can be easy to be used. And I don't have to spend too much time. Okay, so I have something here going on. Okay, I'm ready to share my screen. Okay, can you guys see my screen?
Yeah.
Okay, so now what we're going to have? We're going to start our sales budget. We're going to have months. Before we start doing this, you know the year has 12 months, correct? Start with January, then we have February and keep going, correct? That's what usually the normal cycle of the year is. So once we have 12 months, all the way to December, now we can identify 4 quarters, correct? First quarter is always going to start from January and going to finish at March. Second quarter is going to be April to June. Then we're going to have the third quarter, which is July to September. And then we're going to have the last quarter, which is October to December. Make sense? So let's see what the question asks us. This company, I'm going to copy the question and I'm going to flip it here on the in the Excel spreadsheet. This company is preparing budget for the quarter which ending in June. So which quarter will be that? The first quarter, the second quarter, third quarter, the fourth quarter? Obviously, that will be the second quarter, right? April to June. The quarter starts on April 1st and ending on June 30th, correct? That's the starting point and ending point. So the first quarter ends on March 31st, correct? How distant is the end of the first quarter, beginning of the second quarter? Do you know? Sometimes that gives you a lot of trouble when somebody says, ending balance on the first quarter is the beginning balance on the second quarter. And you start thinking, oh, what's happening here? How distant is one quarter to another quarter?
How distant, like in days?
Like a days or like a time. How distant is one quarter from another quarter?
1 day?
1 day or 1 second?
Well, maybe 1 second then.
It's actually 1 second, right? Because on March 31st, at 11:59, you are on quarter one, but April 1st start on 00.00, correct? How much time we have from 11:59 to 00? 1 second. That's how distant is one quarter to another quarter. That's why always the ending balance of the first quarter is the beginning balance of the second quarter. Then we're going to go to the same idea of how distant are 1 year to another year. Well, again, it's a 1 second. Because here you are on December 31st, and here you're on January 1st. So how much time you has to pass in order for me to move from 1 year to another year? Just 1 second. Make sense? That's why the ending balance in December is the beginning balance of January. Ending balance for one quarter is the beginning balance of the second quarter. Make sense? So what we have to do now? We have to identify that our quarter is only April to May. August and July are part of the next quarter. And we have to get our totals for the first quarter. That's the whole thing that we have to do. So now, what we have? We have our budget sales. Budget sales for April are 20,000 units. For May are 50,000 units. For June are 30,000 units. Then we have July 25,000 units and August 15,000 units. What else we know? We know that our selling price is $10, which $10 is going to stay the same. I don't have to repeat it. So that may be my selling price. Once I have my selling price, can I get my total sales?
Yes.
Why not? Who's going to stop me, right? My total sales for April will be $200,000. For May and June, May will be 500,000. For June will be $300,000. As in total, my total for the quarter will be, I'm selling 100,000 units, and my total sales for the quarter are $1 million. In July, my sales will be 250,000, and in August, my sales will be $150,000. And I'm done with my sales budget. That's how difficult it is to get your sales budget. That's what you have to do on your case. So by now, I should expect you to have chosen your partners for the case. If you haven't done it yet, please do it. And once you do it, I'm going to post the questions so you can start working on your assignment, on your case. The groups are set up for 5 people. I know you usually ask me, can we have more than 5? No. My answer will be no. I want everybody to have a right amount of people in the group. Probably one group only will be, I mean, depends. I believe you are 35 people. I still have to check the number of the people. If you're having problem with, I don't have partner for the case. If you don't have a partner, then I'm gonna assign you for a group.
Sorry, it was partners or groups of 5?
Group of 5.
Okay, thank you.
Choose some people that working harder during the lectures and get them to do the work, and you'll be fine. That will be the easiest way to set up the group. I'm joking. So let's get this one. Let's move this one here on the top because we don't want it that low. And let's see what else happening in our case. So once we do the sales, let's move to the slides and see what the slide's gonna give us. Those are our sales. And once we do we can prepare now the sales budget. Sales budget is nothing different that we just prepared. And you can see for the first quarter, our sales units that we're planning to sell $100,000. From if we sell those 100,000 units, we can generate $1 million sales. That's our budget sales. Now, is the sales equal to cash? Well, that will depend. That will depend on the business. Depends what kind of business you're running. If you're running cash business, most likely your sales will be equal to the cash. If you're running like a food court, definitely your sales will be equal to the cash that you're having, because you're not going to give the people their food if they don't pay you. So as long as you're running your cash business, that's no problem. However, this company, they're not running cash business. Their business is on credit. So let's get this information, copy it on the Excel spreadsheet, and go to the Excel spreadsheet and work on the Excel spreadsheet. It's good that I made it colorful so I can actually see it. So this chart was related to our sales budget. Now let's prepare the same thing, but for the collection budget. So we did the hardest part. We sold the units. Now we have to do the easy part to collect the cash. Because at the end of the day, you don't want sales, you don't want income, you want cash. So in order to get the cash, what do we need? I'm going to use the same thing, but with a little modification. I'm going to start, that will be a good starting point for me. I'm going to add some columns here. And actually, I don't need those one to be. Like this, and those will go like this. Okay, that's better for me. So what we're gonna do? First, we have to figure out how much we're gonna collect every single month. So how much we're gonna collect at the end for April, how much we're gonna collect in May, how much we're gonna collect in June, and July and August. So we don't have that information. So the total cash received. So we have to get those numbers. What do we know? We know that this company collected the following pattern. 70% of the sales they collecting in the month of sale. The other 25% they collecting the next month. 5% they never collecting. We also know that the end of the first quarter, remember the end of the first quarter is March 31st. At March 31st, we had to collect, we have accounts receivable of $30,000, which are collected in full when? Most likely in April. So what we're gonna collect first in April? We're gonna collect our balance, beginning balance from the accounts receivables, which is for March. Correct? That will be our first collection here. We're gonna collect those $30,000. You guys with me?
Sorry, Evan, I have a
Yes.
question.
Yes.
So according to the question, there are 5% uncollectible.
Yes.
So account receivable should be 30% of the previous sales, and the 25% uncollectible. Is that correct?
That's correct. So in our case, having that in mind, how much we're going to collect from the balance accounts receivables?
Is that 25?
What the question says? What the question says?
Thousand?
What the question says?
The question says, oh, collecting in full. Oh, sorry.
Collect in full, right? So that's one thing that it's very important for you to read the questions. Once you see calculations, you automatically assume that this calculation, those percentages apply to your case. Read the question. What I'm seeing is usually the students, they don't make a mistakes because they don't have a knowledge or cannot have don't have the technical skills. They're missing the soft skills. Soft skills means read the question, pay attention to details, see all the information on the question. So if the questions here says that the collection will be collected in full, those percentages applying only to the sales. Make sense? So first thing that we're going to collect in April is our accounts receivable for March, correct? What is the next thing that we're going to collect in April?
70% for this month.
30% or 70%?
70.
70%. Next thing that we're going to collect is the 70% from April. So 70% of the sales. So that will be 70% of sales in April. Let's put here 70. And then we're going to have this number times 70%. 140. So how much we're going to collect in April?
$170.
170,000. So what's going to happen in May? In May, we're going to collect the 25% of the sales in April, correct? So that will be equal to 200,000 times 25%. We're going to collect 50,000. What else are we going to collect in May?
The 70% of the sales of May.
That's correct. May. So that will be equal to 70% here. That will be equal to 500,000 times 70%. That's $350,000. And we're done with May, right? No more to collect. How about in June? What are we going to collect in June?
25% of the sales in May. And
25%.
70% of the sales of June.
Okay, let's go. We're going to get this 25 first. That will be May. $500,000 times 25%. We're going to collect this 125, and then we're going to collect the 70% from the sales in June. That will be equal to this one times 70%. Make sense? So now, if somebody asks you, what will be your accounts receivables at the end of the quarter? In other words, how much of the June sales you're going to collect in July?
I'm
What will
guessing
be
the 25% remaining, right?
right? That will be the 25 from June. And that will be equal to this one time 25. So how much will be our accounts receivables at the end of the quarter?
$75,000.
$75,000. Let's mark it here as accounts receivables. At the end of the second quarter will be $75,000. So what we can see from here, we can see that sales is not equal to cash. Can you see it?
Yes.
You're selling $100,000, sorry, $1 million, but you're collecting $905,000. And if we have to be correct, from the $1 million that you're selling, you're gonna collect only $950,000. Why? Because you have 5% uncollectible. But you're not gonna collect those $1 million, $950,000 all together in the quarter. You're gonna leave $75,000 carry forward in July. Obviously, you're gonna collect the $30,000 that come from March. But that's because you're moving from one quarter to another quarter. Okay, so that will be our sales and accounts receivables. Let's label this worksheet so you can use it after that, sales and accounts receivables. All right, let's move now to the slides and let's cover the slides for those. Once we start doing the collection, again, first we're going to collect the accounts receivables that's sitting as a ending balance at the first quarter, 30,000, because that will become a beginning balance on the second quarter. We're going to collect it in full in April. Then we're going to start collecting 70% of the sales in April, and 25% in May. Then 70% of sales of May, we're going to collect it in May, 25% we're going to collect it in June. And now comes the question, what will be the total cash collection for the quarter? Which we already calculated. And the answer was $905,000. Once we prepare, that's what we should get. In our calculation, we went one step further. We calculated how much will be the accounts receivables at the end of the quarter, which is related to 25% of the sales in June. We're done. Sales budget and cash collection budget are done. Now, what we have to do, we have to make sure that we have those products available. Because if we don't have the products available, what are we gonna sell? So for that reason, first we have to figure out our inventory. Now, management, what the management wants is the ending inventory to be equal to the 20% of the following month budgeted sales in units. The information that they give you is on March 31st, we have 4,000 units on hand. So now what we have to do, we have to prepare the production budget. I'm gonna copy this one and I'm gonna move again to the Excel spreadsheet. Can you guys see my Excel spreadsheet?
Yeah.
Awesome. So for production budget, what I'm gonna use, I'm gonna keep using the same Excel spreadsheet. I'm just gonna carry it forward. And I have to do some modification. First, I don't need any more this part, so I'm gonna delete it. I don't need this one, I don't need these slides. And maybe I can use this later, but let's push it down so it doesn't have to interrupt us. Let's paste here the information that we have. So now the management wants ending inventory to be equal 20% of the following month budget sales. So the question is, how much we need to produce? Let's copy this line here, and push it here. Not this way, probably that will be more appropriate. So what we know, we know our sales. And our sales are that many units, correct? We can easily drag those numbers. We don't even have to make too much effort on those numbers. So those are our sales. So for the first quarter, our sales will be $100,000. We already know that. What else we need? Management wants to have ending balance every month equal to 20% of the following month's sales. Why the management need that? What do you think the management need that one? Just to make our life difficult? What do you think?
To see the cost of goods sold? Oh, sorry, cost of good manufacture?
They're gonna see it, but why do I need ending balance?
To make sure they have enough inventory to sell at the beginning.
Exactly. Imagine this. Imagine this, you're working in the coffee shop. And today, you have a very good day of sales. You sold all your coffee. Is that good for you? What do you think?
No, because you won't have anything to sell tomorrow.
Exactly. Tomorrow morning at 6 o'clock, when the first customer comes, what you gonna sell him? Yes, it's good that you sell all your inventory. That's excellent job. But Costco open at 10 o'clock. When the customer comes, what you gonna tell him? Hey, by the way, can you wait until 10 o'clock so I can run to Costco, get some coffee, and then sell you coffee? Obviously, you cannot do that. So for that reason, you always want to make sure that you have enough inventory at the end of the day to start the next day. So you have to have enough inventory to cover you from 6 o'clock to 10 o'clock when the Costco opens. Actually, you need till 11 because somebody has to go there and come back with the coffee or bring the coffee in the store. So if you have only coffee till 10 o'clock, you're in trouble. You should have coffee at least to 11 o'clock. Okay, so for that reason, this company, probably they run out of the inventory. They learned their lesson. Now they don't want to run out of inventory. That's why they require at the end of the month to have 20% of the following month sales. So let's incorporate those numbers and see what's going to happen. They need 20%, correct? 20%. So now in April, I have to have 20% of which sales? Following month, which is May, correct? So what will be the inventory the ending balance that I need to have? I need to have 10,000 units. Make sense?
Yes.
So that means I need to have available 30,000. Correct? But I already have beginning balance from the previous month, correct?
Yes.
Which is 4,000 units. Not 400, 4,000. Let's make it 4,000. So how many I need to produce?
26,000.
Yes, 26,000. So in April, you need to produce 26,000. If you produce 26,000, you're going to have enough to sell 20,000 to have inventory, ending inventory, that's going to carry forward for the next month. Make sense?
Yes.
Okay, so let's keep going and see how much we can get from this. We get the first month. Let's get the second month. May. We start us, we need sales. We need to sell 50. What else we need?
Ending inventory for 6,000.
Which will be equal to the next month sales time 20%. So I need to have 6,000. So in total, I need 56. But I already have how many?
10,000.
10,000.
No.
Yeah. 10,000 is my ending inventory from April, correct?
Yes.
We already established the ending inventory in April is the beginning inventory in May. So how much should be my production? 46,000 units. Next month.
I just have one question.
Yes.
All of this is done before the year starts, or you have to start doing it after you get like the first sales data?
When do you think you were gonna do this?
I think that you need to have like all the information from the sales made, but I don't know. Is it like a prediction or something?
This is budget. Don't forget. We're doing
Okay.
budget now.
Okay. Okay.
Okay. So we have our sales in June. How much should be the ending balance at June? Ending inventory. Should be 25% of 25,000, correct? 20% of 25,000. Or 5,000. So I need to have 35, but I already have 6. So how much I need to produce? 29,000. Make sense? Are you guys with
Can
me?
you simplify that a bit more?
Sorry?
Can you please simplify that a bit more? Like, how did you
Simplify?
get to 29,000?
Which
Yeah.
20,000? Which 20,000?
The 29,000 as to how you got it when you like did the calculations and like,
Okay, so in April I need to sell 20, correct?
yeah, that's right.
But I also need to have 20% of the next month sales.
Yeah.
How much is the 20% of the next month sales?
20% times 50,000, which you get 10,000.
10,000. So in total, how much I need?
30,000?
30,000. I already have, how much I have for March?
4,000 units on hand.
4,000 on hand. So I need to produce in April
26,000.
26,000. Okay, let's do the same thing for May. In May, I'm selling 50,000, correct?
Yeah, you're selling 50,000.
But I want to have 20% of the June sales.
And that's like 10,000.
30,000 is my sales
Oh,
from
okay.
June
Oh,
next
yeah.
month,
Okay.
right?
Oh, okay.
Time 20%,
That's 6,000.
6,000. So in total, how many I need?
56,000.
50. But I already have
The 10,000.
the 10,000.
That's
So how many?
46,000.
46 to production. Next month, in June, I need to sell 30,000. But I need to have 20% of the following month sales. Which one is the following after June?
July, so that's
July.
25,000 times 20%.
25 times 20%. So I need to have 5,000. So in total, I need 35.
Yeah, 35.
But I already have
10,000. So you need to
no. I don't have 10,000. How much is my inventory in May?
6,000.
6,000. So how many I need to produce?
29,000.
29,000. Okay. How about in July? I need to sell
It's-
25.
It's 15,000 times 20%.
Okay, 15,000 times 20%. 3,000, correct?
Yeah, 3,000. Yeah.
So in total, I need 28.
28. Yeah,
But I
28.
already have
The
5,000.
5,000.
Already have 5,000, correct? From June.
Yeah.
So how many I need to produce?
28,000 minus 5,000. And we get 23,000.
23,000. Now, let's focus on the quarter because we're doing only for the second quarter.
Okay.
Total sales for the second quarter, $100,000, 100,000 units, correct?
Yeah, 100,000. Yeah.
Ending inventory. How much is my ending inventory at the end of the quarter?
The ending inventory would be 10,000 plus 6,000 plus 5,000.
So listen to me carefully again.
Okay.
At the end of the quarter, which is the month that ending the quarter?
June,
June.
What will be the ending balance at the end of the quarter?
5,000.
5,000.
The ending balance of the last month of the quarter, correct?
Yeah.
So it will be $5,000,
Oh, okay.
right? So in total, how many I need? 105.
105,000.
But in the beginning of the quarter, how many I had?
In the beginning of the quarter, you had 100,000.
Look at the question. When the quarter started?
So it started in April. You had
In
20,000.
April. So in April, how many I had?
20,000.
Again, look at the question.
Oh, 10,000.
And 10,000 is the ending balance that I have at the end of the April. The question is how much was my beginning balance at the beginning of April?
4,000.
4,000.
How did you get 4,000?
It's given here,
Oh, yikes. Sorry.
right? It says on
Oh,
March 31st, I have 4,000. But we already established that March 31st, the balance on March 31st is the balance on April 1st, which
okay.
April 1st happened to be the beginning of the quarter, correct?
Okay. Yeah. Yeah, I
So-
agree.
So how many we need to produce?
99,000. Actually,
$101,000. $101,000 units, right? Now, if we produce 101,000 units, we will be able to sell 100,000 units, and we're gonna have ending balance of 5,000 units.
Yeah.
That will be our ending balance. Make sense? So the
Yeah.
ending balance of the June is ending balance of the quarter.
Okay.
Beginning balance of April is the beginning balance of the quarter.
Okay.
Make sense? Okay, we're done with the production. Now we know how many we need to produce.
Okay.
Let's move to the next one. I'm gonna stop sharing this. I'm gonna move to the slides. Again, we're starting with the sales. We're adding the inventory that we want to have, 20% of the next month's sales, and we're getting how many we need. We're deducting the beginning balance, which is sitting in this case from the previous quarter, which is 4,000. And we get what we need to produce. The question is going to ask you, what is the required production for May? The required production for May, if we look at the Excel spreadsheet, that was equal to $46,000. So our answer will be B. That's how we get the $46,000. Again, don't forget, these are ending inventories, 20% of the next month's sales. The beginning inventory is the ending inventory from the previous month. What will be the tricky one? The tricky one at the end of the quarter, budget sales, calculated April plus May plus June, get it. Then stop. Because the ending balance of the quarter is the ending balance of the last month of the quarter. And the beginning balance of the quarter is the balance at the beginning of the quarter. Once you get those numbers, you're going to get that the total production that you need to achieve in order to generate 100,000 sales is 101,000 units. Once we know that, let's start preparing. Now we know how much products we need to produce. Now let's start producing it. First, what we're going to do? We're going to get budget for direct material. That's the first element, direct material. Then we have to do direct labor. Then we have to do manufacturing overhead. Let's start with direct material. This is the information that we need to have for direct material. So I'm going to copy this and I'm going to move again to the Excel spreadsheet. Okay, we're back to the Excel spreadsheet. So here we did production. Now let's move to the next one, and the next one, let's do our direct material. We don't need this one. That information is already used. So let's post the new information. This is the information for the material. Now, in order to do our budget for direct material, we're going to start with the production. Because we need to produce those units, correct? I don't need this one. Now I changed my mind. I don't need this one. I can easily delete it. Like forever. And what else I need? Let me grab this line and copy it and paste it right here. So I have my months and the total for the quarter. Production. My production here is 26,000. Those are units. Those are not dollar amount. And for July, my production is 23. In total, my production for the quarter is 101,000 units. So far, so good, right? So let's see. Let's get more information. First, This company, at Royal Company, 5 pounds of material are required per 1 unit of product. How much material we need? 5
5
pounds,
times the amount
right?
of the
5 pounds, we need 5 pounds. So in total, how much total material I need? Can I calculate it?
Yeah, just by multiplying them.
Just multiplying it, yes, that's correct. And I'm gonna get my total pounds that I need. Make sense? How many pounds material I need to purchase for the quarter? 505,000 pounds. If I have this material, that's the material I need for my production, correct?
Yes.
Now, what else the question says? Management wants, besides this total material to produce, total material for production. Let's write it down because I don't want you to be confused. That's the total material to achieve our production. Now, the management wants we not to run out of the material. In order we to do that, we have to keep 10% of the following month production as an ending balance of the current month. Make sense? So what we have to do, we have to basically repeat what we did here for the production, but for the material. So let's see, ending balance of material, they want to be 10% of the following month production. Do I have my following month production? Yes, we do have it. So how much will be the 10% of the following month production at the end of the April?
1,300.
Think about it.
Oh, sorry, 13,000.
So think about it. What they want at the end of the April, I to have 10% of the following month production. Which one is the following after April?
May.
May. And I
It's
need to have 10% of the May's production,
which is 23,000.
23,000 times 10%. So I need to have $23,000, 23,000 pounds. We own pounds here. Make sense?
Yeah.
So in total, I need material needed in total I need 153,000 pounds,
Perfect.
but I already have beginning balance, correct?
Yes.
How much is my beginning balance?
13,000.
13,000 pounds. Let's think about for a second. Is the 13,000 pounds 10% of my material needed in April?
Yes, it is.
Yes, it is. So let's put some here. Total material needed. Let's put some lines. So we have the beginning balance. So how much will be material that is needed? Material to be purchased, right? How much material we need to purchase?
140,000.
140,000 pounds. Do we need that number? What do you think? Do I need this number?
Maybe.
Maybe or yes?
Yes.
Let's be more like a rock solid on here. Not maybe, but yes, I need that number because my purchase managers are gonna ask me, hey, how much material you want me to purchase? So for that reason, when you go to the Costco to buy a coffee, you know exactly how much coffee you need and how much coffee to buy. Make sense? So let's go to the next month. What's gonna happen next month? Next month, we need, how much we need? We need those 230,000 pounds to produce our product. But we also want to have, at the end of May, 10% of the following month production. On the end of the May, the following month is June, correct?
Yes. It would be 14,500. Hello, Ivan? Is it just me or did the screen just froze? Because
I
Sorry?
think he froze.
No, I just had to do something. Had to cough a little bit. I didn't want to record my cough.
oh, okay.
Sorry about that. So, ending balance. How much will be the ending balance? Did you guys calculate it?
14,500.
Absolutely. 10% of the next month production. Time 10%. It will be 14,500. So in total, we need how many pounds? 244,500, right? We
Yeah.
already have 23 from the previous month. So how
Oh.
many we need?
You deduct 23,000 from 244,500 to get 2021.
500, right?
Yeah.
Next month, June, we need 145,000 pounds to produce 29,000 units. But we also want to have 10% of July's production at the end of the month. So we need to have how many pounds? 11,500 pounds, correct?
Yeah.
With having that, we need total 156,000 pounds. But we already have 14,500. So in total, we need to purchase, we need to tell our purchase managers that he need to purchase 142,000. Let's see now in total, our total calculation for the quarter. We already established that with total production, material that we need for our production is 505,000 pounds. We need to keep ending balance, correct? How much is our ending balance at the end of the quarter? Somebody to help me here?
11,500.
11,500. How am I going to get it? That's the balance at the end of the last month of the quarter. So the last month of the quarter can give you the ending balance for the quarter. So in total, we need 516,500 pounds. But in the beginning of the quarter, we had how many?
13,000 pounds.
13,000 pounds. Because on March 31st, we had 13,000, which became the beginning balance in April. So for the second quarter, we need to purchase how many pounds? 503,500 pounds. So now we can send our purchase manager to do his purchases. Make sense?
Excuse me, Ivan, I have a question.
Yes.
Yeah, because this is the budget. So every month you have to have a budget depends on 10% of the next month material for production. Is it the production is an estimated because every month that's different? Is it
So
estimate for next month
production.
will be how much production is it? That's
So
yeah,
how did we get the production?
yeah.
Remember? Based on sales.
Oh, yeah.
So what drives our production? Our sales.
So
So if we're not selling 20,000, we don't need to produce 26. Make sense?
yeah, yes.
So you understand now.
S-
So what drives our purchases? Our production, our sales.
Okay, just
So
depends.
right. So you can say
It
the other way. So the material we need to purchase are based on the production, but we need to produce those units because we want to sell 20,000.
okay. You mean the production is the actual production or you predict it?
It's at this point we are all budgeting. Why? Because we're budgeting to have 20,000 sales.
Oh, okay. Yeah, okay,
Make,
understand.
make
Thank you.
sense?
Yeah. Yeah,
Everything
makes sense.
at
Thank you.
this point, everything is on budget, right? If we want to sell 20,000 units, we need to produce 26,000 units. If we want to produce 26,000 units, we need to purchase 140,000 pounds. Make sense?
Yes. Yeah, makes
So
sense.
in
Thank
the
you.
first quarter, if we want to sell 100,000 units, and if we want to achieve $1 million sales, then we have to produce 101,000 products. But in order to produce those 101,000 products, we have to purchase 503,000 pounds of raw material. Make sense?
Yes. Yes. Thank you.
Okay. So now, once we purchase the material, what else we have to do? We have to pay for the material, correct?
Yeah.
And how much is the cost for our material? It
40
costs us 40 cents per pound. So let's get the cost. So from the cost, what I'm gonna do, I'm gonna grab this, since it's very similar, I'm gonna grab this part only and copy it, and I'm gonna flip it right here. And I'm gonna get rid of this and get rid of this. So now what will be the total cost for the material? We need cost per pound. Our cost per pound is 40 cents. Correct? Let's get some dollar amount here. But we want it with the decimals. 40 cents is our cost per pound. Are you guys with me?
Yeah.
So how much will be my total cost for the material? 140,000 pounds times 40 cents. So in April, my cost will be $56,000 now. Let's grab from somewhere dollars. Format cells, and let's put it currency and eliminate the 0 decimals. Place is 0. Okay, and should be. What are we doing? Canadian. Like this. So for the first quarter, I need to pay. Oops. Let's go back one. For the first quarter, I need to pay 201,400. For this, we don't have it information. So that's where we are here for our quarter. Now, let's go back to slides and see what else the slide's gonna give us. Because we're running out of information. We use everything here. We use our information from these slides. So let's see what's happened on the next slide. We're starting with the production here. We're getting the production. Then we getting the material that we need per unit in pounds. We're gonna get the total material that we need for our production, 505,000 pounds. Now we start working with the desired ending inventory. We want 10% of the following month inventory to have it as a material. So we're not gonna run out of the material in the beginning of the next month. We're adding that material. We're deducting the beginning inventory that we already have from the previous month. And we see how much material we need to be purchased. Once we complete the whole chart, we're gonna see that we need to purchase for the second quarter 503,500 pounds. Now let's see. This company pays 40 pounds for the material. They pay 1/2 of the month purchases is paid in the month of the purchase. The other half is paid on the following month. In March 31st, accounts payable balance is $12,000. So can we calculate the disbursement, cash disbursement for the material? Let's go back to the Excel spreadsheet and let's see what we can get. Let me share my screen. Let's lower this one. That's related to our direct material, which was right here. And now let's go to our payments. Let's pay the suppliers, since we know how much we need to pay. Let me insert some rows here. Here we go. So we have our material to be purchased. We calculated, we know how much we have to pay per pound. What do we have to do? We have to calculate how much is gonna cost us the material that we need in our production. Once we calculate that one, we can easily see how much we have to pay for the, how much gonna cost us 503,500 pounds. Now, we have to pay those ones. What we're gonna pay first in April? First, we're gonna pay our outstanding balance on accounts payable for March. How much is that?
12,000.
12,000 is the first amount that we're gonna pay. What else we gonna pay in April?
April month, 50.
How much? Only 50%, right? Accounts payable for April. And how much will be that? That will be 56,000 times 50%. When we gonna pay the other 50%?
Next month.
Accounts payable for April. We're gonna pay it in May. Again, 50%, correct? All this will be 50%. What else we gonna pay in May? accounts payable for May, but only 50%, correct?
Yes.
And the other half of the May purchases, we're gonna pay it in June,
June.
correct? Let's get it down. Time. Not this one, this one. Sorry. Will be this one time 50%. What else we're gonna pay in June? Half of the accounts payable for June, correct? So now the question is, how much will be our accounts payable at the end of the quarter?
Half
Can we-
of the June.
Half of the June. Or it's gonna be 56 times 50%. So we have to enter here 50% and we're gonna get it. So that will be our accounts payable. Let's mark it here and let's leave it for later. We might use it. Make sense? This one is very straightforward. There's nothing, no challenges, nothing here, correct?
Somewhat, yeah.
All right. Let's go and check the slides. So again, the slide starts with, first we're gonna pay accounts payable from March, and then we're gonna start paying 50% of the April in April and 50% from April in May. Then we're gonna go to the next one and we're gonna pay the 50% in May, and the other 50% in June. In June, we're gonna pay only 50% of the purchases for June, and the other 50% will stay as accounts payable for beginning of the second quarter. And we're done with our materials. And that was the most kind of difficult part of the calculations. From now on, it's all downhill. First, we have to do labor. What's the interesting with the labor? The interesting for the labor is there's no beginning balance, there's no ending balance. That's the good thing. So there's no requirement to keep a beginning balance for the labor or ending balance for the labor. There's nothing like that. So let's see our information. I'm gonna copy this information. I'm gonna flip it to the Excel spreadsheet, and we're gonna go to Excel spreadsheet again. For the labor, I'm gonna move one worksheet ahead. I'm gonna keep it this, and I'm gonna post the new information right here. Can you guys see my screen?
Yeah, I can see it.
So, this company, for each unit of production, requires 0.05 hours. So we need our production. Because based on the production, we're gonna apply the labor. The company has no layoff policy, so all employees will be paid 40 hours for work each week, regardless of the hours they work. So if they're working, so watch this, regardless of the hours, more like if they work less than 40 hours, they're gonna pay 40 hours. If they work more than 40 hours, we're gonna still pay them, but we're not gonna pay them overtime. And what they're saying is for the next 3 months, the direct labor workforce will be paid at minimum 1,500 hours. So every time when they go below 1,500 hours, we're gonna pay them 1,500 hours. If they go over, we're gonna pay them what they work. So since we're paying based on the production, we need our production. Production was right here, correct? Let's get our production and flip it right here. And start building the new sheet. So our production was 26 in April, 29, and in July, August, we don't need those numbers, we don't need. How many hours we need per unit? Per product. How many hours we need?
0.05.
0.05 hours. So now, once I have this information, can I calculate the total hours that I need?
Yes.
Yes. Total hours needed for our production, it will be times 0.5 will be 1,300 hours. In April. In May will be 3,000 and 2,300, and in June will be 1,450. In total, the hours that we needed for this production will be 5,050 hours. However, look at the question, what it says. They're saying that the company is gonna pay 1,500 hours at minimum. So if that's the case, is there any months that we have less than 1,500 hours?
April and June.
April and June. So what we're gonna do in those months? Hours paid to be paid. Here will be 1,500, correct? How many hours we gonna pay in May?
2,300.
2,300. How about in June?
1,500.
1,500. Why 1,500? Because that's what says in the question here. The question says that I'm gonna pay minimum hours to be paid. To be paid 1,500. Here we're gonna pay whatever they work, 2,300, and the June we're gonna pay that. In total, we're gonna pay how many hours? We're gonna pay 5,300 hours. Now, how much we paying per hour?
$10.
$10. $10 here, $10 here, and $10 here. Let's get those dollar amounts and apply it right here. I need actually those two. So how much is our total direct labor to be paid? How much in total we need to pay? In April, we need to pay 15,000. In May, we need to pay 23,000, and in June, we need to pay 15,000. In total, we need to pay 53,000 hours, $53,000. Make sense?
Yeah.
And we're done with our labor. That was our labor. That's how difficult is the labor. It wasn't that bad, was it? Labor is done. Let's move to the next one. Let's see what else sitting for us in the slides. Okay, so let's prepare. Let's see how they're doing. There will be no difference with what we did compared to what they're showing here on the slides. We're applying 0.05 hours per product. We're getting the hours needed. Guaranteed labor hours is 1,500, 2,300 in May, 1,500 in June, in total 5,300 hours. We pay them $10 per hour. That's $53,000. Now the question is, what if, let's move to the slides, to the Excel spreadsheet and check this question and see if we can get it. The question is, what would be the total direct labor hours cost for the quarter? What will be the cost for this quarter? Let's copy it so we can see it and compare it with the question. This will be production here. Let's get the numbers. What will be the total direct labor costs for the quarter if the company follows its non-layoff policy but pays $15 for every hour work in excess of 1,500 hours? So what we have to do? We have to do some adjustments in our formula in order to get it. In which month we have more than 1,500 hours?
May.
May.
In May. How many hours are over 1,500?
800.
For the 800. For those 800, we have to pay additional $5. Make sense?
Shouldn't be $15.
Sorry?
I thought it's 15.
We're gonna have 15,000, right? 1,500 first, and then for the 15, yes, 15 hours. So one way you can do it is, watch this. First, if we put in here 2,300, right? 3,300, that's how many hours we need. So we're paying $10. On the excess hours, we have to add additional $5. That's one way to look at it. Make sense? The other way to look at it is on eliminate the 1,500, pay them $10, see how much is the total cost, 45,000. For the remaining 800, pay them $15 per hour. So that will be equal to this one times that one plus this one times that one. Now we have to put the brackets, otherwise it's not gonna work. Here bracket and here bracket and another bracket here. 27,000 here. So our total cost will be equal to, not this one, in this case will be that much. Make sense?
That's one interesting way how you use Excel to get the answer. But like I was a bit lost on like
So watch this. There are two ways to get this answer. This is the one way to get it, right? This is one way to get it. The other way to get it is this. So again, Here on the 23,000, on the 23,000, you already paying 2,300, right? You already paid them $10. On the excess of $8, you pay the additional $5. That's another way to get the answer. Right? Same question, two different approaches. Both approaches correct, because in the both approaches, you're getting total of $57,000. Make sense? It's just a matter of the interpretation and matter how you're going to process the information.
Yeah, that's actually quite a challenging concept for me to understand.
Then this will be the easiest way, because on the you for certainly know that on the 4,500 hours you're paying $10. On the 800 excess hours that you have, you're paying 15,
Okay.
right? So stay with this one. This one is okay. I'm paying for the 53,000 hours. I'm paying them $10. The question is, on how many of those because that's the total hours that they're working, right? I already
Yeah.
paid them $10. On how many of those hours I need to pay $5 additional dollars?
The 300 May?
On yes, on the 800 excess in May.
Yeah.
800 times 5, that's 4,000.
Yeah.
That's 57.
Okay.
That's another way you to approach this question. There are two ways. Both ways are correct. Okay, let's move on to the next one. We're done with the labor. Labor is done. Our question is answered. Let's move to the next one. Watch how they're doing it. They're checking the hours, which month you owe overtime, and then you're getting the total. Total is 5,300 hours. On the 4,500, you're paying $10. On the 8,000, you're paying $5. That's $57,000. Once we do this, direct material and direct labor, the next thing is the manufacturing overhead. Manufacturing overhead is very straightforward now. What do we need? We need, again, additional information. What will be that additional information? Here from the slide. Okay, I'm going to copy the slide, move again to the Excel spreadsheet, and we're going to continue with the Excel spreadsheet. I'm going to copy and paste it again here, and going to label it manufacturing overhead. For the manufacturing overhead, I'm going to paste the picture here, and we're going to see the manufacturing overhead is applied to the units of production based on the direct labor hours. The variable manufacturing overhead rate is $20 per direct labor hours. Fixed manufacturing overhead is $50 per month and includes 20,000 non-cash cost, which is the depreciation of the plant asset. We need to prepare the manufacturing overhead budget. For the manufacturing overhead budget, I can use this format here. Let me reduce the font to be 16, not 18. Then I'm going to copy this months. I need those months to label those months. Then I'm going to start reapplying the manufacturing overhead based on the direct labor hours. So what do I need? I need the hours for production. Total direct labor hours. Oops, not those one. Not here, right here. Direct labor hours. And my direct labor hours are those one, right? So I can easy track those one down. Not the hours that I'm paying, but the hours that they actually worked. So in reality, they work exactly 5,050 hours. I'm gonna apply variable manufacturing overhead. Variable manufacturing overhead. It's $20 per hour. And that's gonna give me total variable manufacturing overhead cost. Variable manufacturing overhead cost will be this one time $20, and I can easily drag but I need this number to be in dollars, so let's flip it to dollar amount. Currency and choose that dollar. And this is the total dollars I need to pay. $101,000 for the variable manufacturing overhead. Then I'm gonna have the fixed manufacturing overhead. Fixed manufacturing overhead. What's the fixed manufacturing overhead? Once it's fixed, it's fixed. So 50,000 is gonna apply every single month, correct? That shouldn't be a problem for us. 50,000 here, 50,000 here, 50,000 here. So our total manufacturing overhead is equal to $150,000. So my total cost, manufacturing cost for the period, is equal to manufacturing overhead cost let's label it here total. $76,000 here. Let's extend those cells so you can see it. And the total cost will be equal to $251,000. Now, we have to deduct, if we want to prepare to see how much cash we actually paying, we have to deduct the non-cash item, correct? Because for the depreciation, we're not gonna pay the cash. Deduct non-cash, which is here 20,000. In total, that will be 60,000. So the cash paid, to be paid, for manufacturing overhead, it's gonna be equal to this one. Actually, let's go the other way. Let's grab those two and calculate it to the calculation and drag it all the way. And that's our numbers. Let's get rid of those zeros. And we have our budget. Make sense? So
Yeah.
one more thing that we can get from this budget is let's do it in the next one. Let's go now to the slides, cover the slides. and go slowly so you don't lose track. So here, again, we're starting with the direct labor hours that we budgeted for our production. Applying the $20 overhead, we're getting the variable manufacturing overhead cost. Fixed manufacturing overhead cost is fixed cost, 50,000, and we're gonna get the total manufacturing overhead cost. Once we get the total manufacturing overhead, we're gonna deduct the non-cash item and we're gonna see only the cash that we pay. Once we do that, we can go now and do the ending finished goods inventory budget. How much will be the cost of our ending inventory? In order to do that, let's go back to the Excel spreadsheet and I'm going to show you. So in order to get our inventory, we need three things. We need the direct material, we need direct labor, and need manufacturing overhead, correct? Direct labor, direct material that we need, that's easy. For every product, we need 5 pounds. Or 5 pounds. And for every pound we paying, how much we are paying? Let me see. For every pound we're paying 40 cents. That's our cost per pound. Make sense? Are you guys with me?
Yeah.
So for direct labor, we need 0.05 hours, correct? And we're paying $10 per hour. So our material cost us $2. Our labor cost us 50 cents per one product. Now we have to find out how much will be our manufacturing overhead. For the manufacturing overhead, we already know that is applied based on the direct labor hours, correct? So for every product, we're applying 0.05 hours. Now we have to find the predetermined manufacturing overhead rate. How can we find that rate? What do we know? We know that predetermined manufacturing overhead rate is equal to total cost estimated cost divided by total allocation base. What's our allocation base? Our allocation base is direct labor hours. What's the total estimated cost? Total estimated cost for the total manufacturing overhead. Do we already calculate the total manufacturing overhead cost? Can we find it? Somewhere on the sheet here. How much is our total estimated manufacturing overhead cost? Can you see it? Are you guys there?
Yeah, you just bolded 251,000.
251,000. And what's our total allocation base usage? Those
From
are
the
the direct,
bullet one, it's 5,050.
right. So what we have to do, we have to get the 251 divided by 5050, and we're gonna get the predetermined manufacturing overhead, which will be equal to this number divided by that number, and we're gonna get a number of 49.70 cents. And that will be our predetermined manufacturer overhead. Let me see what kind of number they're using. Are they rounding up to 71, or they using this one? No, they stay with the 70. So we're gonna stay with the 72 just to be consistent. The only thing that I'm gonna do is I'm gonna actually override this number so it can be exact number rather than calculation. 49.70 is our number. So now I can apply that number to my calculation, and I can get the my cost for my products, correct? So my total product cost will be $4.99. Now the question is, how many products I have as at the ending inventory? Well, we have to go up and check our budget for the production. Here was our production budget. Or we can go here on the production budget and see what's our ending inventory at the end of the quarter. And we already saw that our ending inventory at the end of the quarter is $5,000 or 5,000 units. So if I know that, then I can know that the total inventory balance is 5,000 units. And since I know that, I can easily calculate my cost, total inventory cost. At the end of the quarter. And that will be $4.99 times 5,000. And that's my balance at the end of the quarter. And we're done with this. I'm gonna highlight it because we're gonna need that number later when we're preparing our budgets, the next budgets. Okay, we're done with this. Let's move to the slides and finish a few of the slides to catch up with the slides now. So again, in order to calculate the ending inventory balance, we're going to get the direct material. We know 5 pounds, 40 cents per pound. That's $2. Direct labor is 0.05 hours, $10 per hour, 50 cents. Manufacturing overhead 0.5 hours. We're applying it. 49.17 that we come up with that predetermined manufacturing overhead. So the ending finished inventory will be $24,950. We're done with this. Next thing that we have to do is the selling and administrative expenses. For the selling and administrative expenses, we need to gather some information, and they're providing us with that information. I'm going to copy this, and again, I'm going to move to the Excel spreadsheet. And we can easily see how this is going to develop on the Excel spreadsheet. That will be selling administrative expenses. And I'm going to post it here as a picture again. So for that one, since it's very similar to my manufacturing overhead, I'm probably going to use this format. And I'm going to adjust it to the information that I need. The only thing that I'm going to copy is the name of the month. Okay, so now we have our selling administrative expenses budget is divided into variable and fixed component. The variables selling administrative expenses are 50 cents per unit sold. So here I need my sales, unit sales. And the unit sales, I'm going to get it all the way from the sales budget, all the way from the top here. We already know our budget sales. And if you remember, I was planning to sell 100,000 units. My cost that I'm going to pay is the variable cost on per unit is 0.0550 cents. And once I have that, I can easily calculate the total variable cost. $10,000. I'm gonna drag it and I'm gonna calculate everything. And I have my total variable cost. What do I need to add? I need to add the fixed cost, which is total fixed cost is remain the same, 70,000, 70,000 again, and 70,000 again. And that in total will be 210,000. Now my total sales administrative expenses, it will be equal to these numbers. In total will be equal to that number plus 210,000, and I get my total sales administrative expenses. The last thing that I need to eliminate is the non-cash item. Non-cash item fixed cost, which I have 10,000 here, 10,000 here, that's negative, and 10,000. In total, that's negative 30,000. And so once I deduct it, I'm going to have my cash that I'm paying for the sales administrative expenses to be paid. Sales administrative expenses. So that's what you have to do on your group assignment, one after another, to prepare all the budgets. Once we're done with the selling administrative expenses, the next budget, let's go back to slides and see what else left for us. Not much left at this point. We are pretty much going to the end. Again, put the variable portion first, then get the fixed cost. Oops. How much will be the total cost? We can easily find it. Total cost will be $230,000. That's exactly how much we get on our Excel spreadsheet, $230,000. At this point, we are ready now to prepare the cash budget. Cash budget probably is the most interesting budget that has to be prepared because it has the all information that you need for the entire month. Now, this company gave us a little bit information. I'm going to copy this and I'm going to flip it again to the Excel spreadsheet. And I move again to the Excel spreadsheet. And we're going to name it here. We're going to flip this one and we're going to go cash budget. For the cash budget, I'm going to scroll down a little bit and I'm going to post this information here. So this company giving us all this information, right? We have the information available. They maintain first 16% open line of credit for $75,000, maintain minimum cash balance of $30,000, borrow the first day of the month and paying back on the last day of the month. They want to pay cash dividend $49,000 in April. They want to purchase $143,700 equipment in May and $48,300 in June. Both purchases are paid in cash, and at April 1st or March 31st, they have a balance at $40,000. So we have all the information that we need, and we just have to prepare the cash budget. So for the cash budget, in order to prepare that cash budget, few things that we need to know. The cash budget has nothing to do with the cash flow statement first. Second, on the cash budget, we're gonna have four sections. First section is gonna deal with the cash coming in. Second section will be cash going out. Third section is going to include any excess and deficiency between first section and the last section. And the fourth section is going to show anything related to financial section, which is borrowing, repayment, and interest. For that reason, the principal and interest are excluded for the cash disbursement or cash out, and is shown the separate section, which is the financing section. So let's go back to the Excel spreadsheet and use the Excel spreadsheet and prepare our cash budget. So we already know that our beginning balance of cash for April is $40,000, correct? That's how much cash we have, $40,000. Let me find somewhere cash here so I can copy it and use it as a number. And actually not that one, I want here. And I want all those my numbers to be the same format. Okay, I got my cash. Then what I'm gonna do, I'm gonna get my cash collection. From where I'm gonna get my cash collection? That will be from my first budget that we prepared, cash collection budget, remember? On the cash collection, what we said, is it here? No, it's not here. The cash collection budget is right here. So in April, we're gonna collect $170,000. So we get our $170,000. Total cash that we collected is 210. Now we're gonna start paying for the direct material. Direct material, we're gonna get it from the direct material. 40,000. We're gonna pay. Then we have to pay direct labor. Direct labor, we're gonna go to the schedule for the direct labor, and we're gonna pay them 15,000. Then we have to pay for the manufacturing overhead. For the manufacturing overhead, we're not gonna get the manufacturing overhead cost, but we're only gonna get the manufacturing overhead that we actually have to pay, 56,000. Then we're gonna get the sales administrative expenses, the cash that we have to pay, 70,000. Then we're gonna pay the dividend, which is given to us, $49,000. And there's no equipment purchase in April. There's not the other equipment purchase in April. So in total, we're gonna spend $230,000. At this point, we're gonna have excess or deficiency. This one minus that one. We're gonna have $20,000 we are short in cash. But the company wants we to have $30,000 minimum balance. So our ending balance has to be equal to 30,000. How can I make it equal to 30,000? I have to borrow. How much I need to borrow?
$50,000.
50,000. So if I borrow 50,000, that
50.
means this one plus the 50,000 is going to give me $30,000.
Quick question, where did you get the 50,000 from exactly?
This one
Yeah.
from the question asked. The question tells you
Oh, it says
I
pay.
have to have minimum $30,000. So my ending balance has to be $30,000. I don't want to run out of cash.
Okay.
Currently, do I have 30,000?
No, you have 230,000.
No, I don't have. I don't have.
Okay.
In fact, I have minus 20,
Okay.
right?
Oh, okay.
I have minus 20.
So yeah, you would need
I
$50,000
need
to.
to 50,000, right? To top it up to
Oh,
30.
I see. Okay. Okay, thank you. I understand now.
50. Once I get the $50,000 from the bank, then I'm gonna have minus 20 plus 50. I'm gonna have 30,000. The $30,000 gonna be my balance for beginning balance for May, correct?
Yeah, because you had to borrow it from
Right.
April.
Then I have to check my collection. I'm collecting 400,000. So in total, I'm collecting 430,000. What else I'm doing? I'm gonna flip those one. This is my direct material, direct labor, manufacturing overhead, and selling administrative expenses. There will be no dividend, but I have to do the cash equipment. So I have to pay 143,700 for the cash, which is given to us. So in total, I gonna spend $400,000. My excess and deficit is exactly $30,000. So do I have enough ending balance for cash?
Yes.
I do. That one, but this in this case is 0. So that will be total. Let me change the formulas here. I want to implement here. Total financing is 50,000 here, and then we're gonna get that cash. So that will be equal to this one plus that one. Here is 0. That's how much we're gonna get it. And the next month, June, we're gonna start with 30,000. Our collection will be 335 from that budget, 335,000. In total, we're gonna collect $365,000. Direct material, direct labor, manufacturing overhead, selling administrative expenses, we're gonna get it from the above. I'm just gonna drag it and just coming. No dividend. First equipment, we already purchased it. The second equipment, for the second equipment, we're gonna spend 48,300. In total, we're gonna spend 270, and that's gonna give us excess of $95,000. But hold on a second, I need to have only 30,000, correct? That's how much I need. I need only 30,000, I don't need any more. Do I have enough cash to pay my debt?
Yes.
And to still have 30,000. Yes, I do. So let's pay this one minus 50,000. But now I have to pay interest, right? So that's not here, that repayment will be here. 50, 1, 2, 3. But I have to pay now interest, correct?
Yes.
How much will be my interest? I'm paying 16% annual. So what do I have to do? That will be equal to 0.16 divided by 12 time 3 months, correct? In brackets. Let's put some brackets here. Time principal amount, which is 50,000. So in total, I have to pay $2,000 cash. Let's put minus here. So once I pay this amount, I'm gonna end up with how much cash? This one plus that one. I'm gonna end up with $43,000 cash. Now for the quarter, what's gonna happen? How much is the beginning balance of the quarter? Beginning cash,
40,000.
40,000. Then I'm gonna have those collections. So in total, I'm gonna have that much. Then I'm gonna spend all this money here. That will be that much. In total, I'm gonna spend that much. Then I'm gonna borrow 50, but I'm gonna repay the 50, and I'm gonna pay $2,000. So in total, that will be $2,000 interest that I have to pay, and my ending balance will be, should be $43,000. In this case, is it? Let me double check something. On the totals, if I'm correct. I'm not correct in this number. Let me add some other numbers here. That number should go in this way. 950 is this, that's not the one. That's more accurate number. And now I have the ending balance 43. Make sense? This one is the one that may give me trouble. Isn't it? Now I can get $900,000 here, yes. Now I'm in balance. Okay, so my ending balance is exactly, where is my ending balance of the quarter? So one suggestion for you. If you decide to open your business, if you decide to open business, open entrepreneurship, anything that you decide to open, don't even think to start your business before you have this. Because here you can see which month you have deficiency, which month you have excess, what you're gonna do with the deficiency, from where you're gonna borrow, how much is gonna cost you the borrowing, on which month you're gonna become a positive on the cash, where you're gonna start having the excess of cash. Everything gonna show you this. So don't even think to start your business before you have this cash flow statement prepared. Let's go back to slides and finish the slides. So again, we're starting with the beginning balances of the cash, and we adding the cash collection, and then we're starting from the different budgets to plug in the amount from direct material, direct labor, manufacturing overhead, selling administrative expenses, dividend, total. We're seeing that we are under 20,000, but because we have to maintain 30,000, means that we have to borrow 50. We're borrowing 50, we're getting positive. Next month, we start again, adding the sales plus direct material, direct labor, manufacturing overhead, sales administrative expenses, first the equipment that we purchase, and we're exactly 30,000. And we're moving to the next one until we prepare the entire budget. We're paying the interest, principal, sorry, we're paying the interest, and we're coming up with $43,000 at the end. Cash budget's done. For me, the cash budget is the most important budget. but you cannot prepare it if you don't have the other budgets. Next one is the income statement. The income statement is straightforward. On the income statement, you're gonna have sales, cost of goods sold. We already calculate the cost of goods sold is $4.99. And we know that we're selling 100,000 units times $10 per unit. You're gonna get the sales, you're gonna get cost of goods sold, gross margin. Deduct the selling administrative expenses, not the selling administrative cash that you're paying, but selling administrative expenses. You're gonna get operating income minus the interest expense of 2,000 from the cash budget, and you're gonna get your net income of $239,000. Next thing that you have to do is to prepare the balance sheet. For the balance sheet, we're gonna get this additional information for the land, equipment, common shares, and retained earnings. Once we have those one, we can start preparing. So from the cash budget, we're gonna get the cash. From the accounts receivables, we're gonna get the 75,000, which will 25% of the sales from June. For the raw material, we have 11,500 pounds sitting in the inventory, which was 10% of our required material for production for July. 40 cents per pound, we have our raw material inventory. Finished goods inventory, we already calculated 5,000 units for 99. Then we're gonna add the land, equipment, beginning balance of the equipment, plus the 2 equipments that we purchase. And we're gonna get the assets. Accounts payable, if you remember, the accounts payable was 50% of the purchases that we made in June. Common shares are given. The last thing that left is retained earnings. How are we gonna get the retained earnings? Beginning balance of the retained earnings. We're gonna add the income, 239, and we're gonna deduct the dividend that we paid 49,000 in April, and we're gonna get the ending balance for the retained earnings. And that's the end of our budgets. Now the question is, what we prepared at this point? We prepared something that is called static budget. So, is it useful? Well, if we don't achieve our sales, we can throw in the garbage everything that we just did. So the only thing that we're gonna make this budget useful is if we achieve those sales, exact number of sales. But if you want to make it more useful, we have to move to the flexible budget. How are we gonna move the flexible budget? Well, let's see. Here we're gonna have this. We're gonna have the static budget, which is for the 10,000 hours. Variable cost is 40,000, indirect materials is 30,000, power 5,000, those are variable cost. Fixed cost is fixed cost. Actual results are 8,000 hours. Now, obviously, if the machine hours are budgeted for 10,000, cost will be 1. But if you use it less than the hours that you're planning to use it, obviously the cost will be lower. The question is this helpful for you the way it is to understand, are you saving money or you're not? As you can see, everything looks like that you're saving money. You're saving on the indirect labor, you're saving on the indirect material, you're saving in the power. But obviously you're gonna say, why? Because you're using the machine for the less hours. How can we make this more useful? We can make it more useful if we're preparing a flexible budget. What do we need to know about that flexible budget? We need to know that the variable cost per unit always stays the same. and fixed costs in total always stays the same. So having that in mind, once you see this information here for the 10,000 machine hours, can you tell me how much is the direct labor for 1 hour? If my total direct labor is $40,000 and my machine hours are based on the 10,000 machine hours, how much is for 1 hour labor?
$4.
$4. How about the indirect material?
$3.
$3. How about the power?
50
Point.
cents.
50 cents.
50 cents. So now once I have this information, can I prepare set of budgets on different reality? Absolutely. For that, that's how we're gonna prepare one budget for 8,000 hours. Let me flip now for the slideshow because now, can you guys see my screen?
Yes.
So at this
Yes.
point, I can prepare, once I know that variable cost per unit, and the variable cost per unit always stays the same, and fixed cost in total stay the same, I can prepare different budgets for different hours, 8, 10, 12. And that will be my flexible budget now. Once I prepare those one, then I'm gonna compare with my actual cost. So where is my actual results? My actual results is usage of 8,000 hours. So now let's see, in my budget, if I'm using machine for $8,000, I'm supposed to spend $32,000 in direct labor. In reality, how much I'm spending? 34. Is that good for me or bad for me? What you gonna say? If you're planning to spend $32,000 by using the machine 8 hours, and in reality you see that you're spending $34,000 when you're using the machine for 8 hours, is that good for you or not?
I'm guessing it's bad.
Is bad. So is it favorable or unfavorable?
Unfavorable.
Definitely unfavorable. How about the indirect material? You're expecting to spend $24,000, but in reality you're spending $25,500.
That's unfavorable.
Unfavorable, right? So first one, how much is the 32 versus 34? That's $2,000 unfavorable, correct?
Yes.
So what will be the variance on indirect labor? $2,000 unfavorable. How about the other one? We're expecting here to spend 24. We're spending 25,500. 1,500 unfavorable, right? The only thing that we have a favorable variance is on the power. So in reality, are we saving money?
No.
We're actually losing money. But if we compare here on based on this information, what was that? When we compare on this information, looks like we're saving $11,650. But that's not true. Make sense? That's why we have to move to that very flexible budget in order to find out where actually is the savings. That's what we're going to do next time. So thank you for today. That's where I'm going to stop. Thank you for today. Enjoy the rest of your day and have a great evening.
So do